This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
I've known Jason for about 10 years now, and his company does amazing things for their clients. I found his knowledge on real estate unsurpassed. He's straightforward, honest about his approach, and gives you the information you need without any BS. He's the real deal. I highly endorse it.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Hey everybody, welcome to episode 1769, and you know what that means. On Friday, we will have a 10th episode show, and it is also Flashback Friday at the same time. That is a rare occurrence, so it should be a good one. We got a good surprise for you on Friday. But today, we have a whole variety of things to talk about. Of course, for our American listeners and others around the world, I want to wish you a very happy Thanksgiving. If you don't celebrate Thanksgiving, of course, meaning you're not American, I encourage you to just keep an eye on this holiday. It's a good one. You know, it's that one time of year when we're really reminded to be thankful, to be grateful about what we have in these times of absolute turmoil in the world. There's a lot to complain about, no question. And rightfully so. These complaints are legitimate, very legitimate. But there's also a lot to be grateful for, because when you ask that question, ask the question of yourself, compared to what? Right? Really think about the compared to what? Compared to different times in history, compared to different places in the world, no matter how bad we have it, right? No matter how challenging things might seem. I'm sure nobody listening or nobody viewing this woke up in a North Korean prison camp, right? Now, sadly, some places around the world are starting to look more and more like prison camps. And I'm thinking of our dear friends in Australia with all the absolute totalitarian nonsense that's going on there. But regardless, you know, compared to what, we're still pretty lucky, right? Okay, let's dive into some things we have to talk about. There's a lot on the agenda today. So happy Thanksgiving, of course, and real inflation, real rates of return. Well, let's take a look at this. You know, we've talked about this over the years. We talk about nominal interest rates versus real interest rates. We talk about negative interest rates. But you can also look at this as it relates to return on investment. Of course, we all know that old story about the two hikers in the woods, and a bear starts running toward them. And one tightens his shoelaces, and his buddy says to him, "Man, what are you doing? You can't outrun a bear, no matter how, meaning no matter how tight your shoelaces are, right?" And he says, "I don't have to outrun the bear. I just have to outrun you." And of course, the same is true with inflation, because when we are chasing yield, when we are chasing returns, we have to, of course, beat the hidden tax, the liar, the thief, the pickpocket. That is inflation. That's what it is. It is pickpocketing us. It's destroying the value of our savings, our stocks, and our bonds, and our equity in real estate. It is literally stealing the value away from these things. And this chart is from Dan Amerman. He's been on the show many times. And as we look at high inflation and real rates, 1981 versus 2021. So we look back to 1981 when inflation was very, very high. That was the Jimmy Carter hangover. Of course, if you are interested in economics, you must study the decade of the 1970s. It's a fascinating decade for the study of economics. Why? Because we had the misery index, we had a lot of tumult, we had price controls, we had Nixon taking us off the gold standard at the beginning of the decade, we had Nixon's historic trip to China, which I believe, and this is just my own thought, I've never read or heard this anywhere, I don't know of anybody that's ever really talked about this, but I believe Nixon was, Nixon was a very, very bright man. He was very intelligent, regardless of his foibles and his weird way of talking and his potential criminality with covering up Watergate, right? Doesn't mean he's not smart or wasn't smart. And he was a very, very intelligent person. So I believe after temporarily, which was, of course, a big lie, suspending the convertibility of the dollar into gold in 1971, he saw a great wave of inflation coming. And he really saved us from what could have been and probably would have been much, much worse inflation. I mean, we think it was bad in the 70s and into the early 80s until Paul Volcker, the Fed chair that would never probably happen again in today's world, broke the back of inflation by raising interest rates to historically high levels, which may be what needs to be done in the near future. But I say it's extremely unlikely this time around because we do not live in a world anymore where the public would tolerate taking the tough medicine to fix the problem completely, right? It's always nowadays that the mantra is kick the can down the road. Every elected official, especially presidential administrations, they don't want things to go bad during their administration. They don't want to be blamed for it, right? Oh, look at that awful economy under, whatever administration you have at the time. So let's just take a look at this, right? The real rates of return. So here we've got in blue the 3-month Treasury yield. We've got real inflation adjusted yield in green, and of course the inflation subtraction. Now, understand that this is based on the quote unquote official rates of inflation. The real rates were, of course, much, much higher, but they weren't as manipulated back then as they are today. In fact, I have done some shows on this. I did one profile of Tom Keene on the economy. You may have heard him on Bloomberg. And this was years ago on the Creating Wealth podcast. We played some clips about this, how the Fed in cahoots, I want to say, or conspiracy with the Bureau of Labor Statistics, the BLS, how they manipulated the way inflation was counted. And big manipulations happened in the late 70s or right around 1980. So here we see the 3-month Treasury yield at 14.03% in 1981. We see inflation eating away at that yield of 10.38%. Very high inflation, of course. The real rate, probably quite a bit higher than that. So we see the real inflation adjusted yield on the 3-month Treasury, if that was your investment of choice back then, being 3.65%. Okay, what about today? How does it look today, right? How does it look if we take the rolling 3-month averages? And Dan Amerman is a real student of this. He does a great job with his data. And he's been on the show many times. So please go back and listen to the interviews with Dan Amerman. Really, really good stuff there. Okay. He does some really good work on inflation. Okay. So the 3-month Treasury yield, you can't even see. It's this tiny little 0.04%, right? It's virtually non-existent, right? You can't even see the blue bar on this chart because it is so, so small. Okay. Inflation subtraction, 7.6%. And of course, this is a rolling average, right? So here we look at the real yield inflation adjusted, negative 7.56%. So here today, we are getting inferior yields, but people probably don't see that because they think, well, inflation isn't as bad as it was in 1981. So, we're still running faster than the bear, right? The bear that's chasing us in the woods and that's about to maul us to death, right? But that is simply not true. And of course, the inflation statistics today are manipulated much, much worse than they were back then. So, in other words, real inflation versus reported inflation, there is this giant gap, this huge delta between the truth and the reality. And most of us know this to be true because most of us did not vote for the current administration. And why do I say that? How do I know that? Well, Jason, half the country voted for him. Yeah, but not the people listening, because the people listening are financially savvy, right? They get it. They understand that this administration is a disaster. Not saying the last one was perfect. None of them are. They're all Keynesians, meaning that they're all into just increase the supply of money. Consequences be damned. We'll worry about that later. Kick the can down the road. They're all that way. Trump was that way. Bush was that way. Obama was definitely that way. Just it's the way it is. It's very unfortunate that that's the world we live in, but nobody wants to take the medicine anymore. Okay, so Ashley will be on toward the end of the show today talking about Zimbabwe and what that can teach us as investors about diversification. Remember, those who do not learn from history are doomed to repeat it. And just think about history for a moment. Think about how people in modern liberal democracies think about how this kind of totalitarian oppression that we saw during World War II in Germany, for example, under the Nazis, right? This could never happen to modern democratic countries. Well, it's happening, right? It is happening right now as we speak in Australia. If you are not aware, or you're only slightly aware of what is going on, affecting 25 million people down under in a modern democratic country, it is absolutely shocking. Just go do some research on it. And by the way, just assume, like these faulty, lying, fraudulent inflation statistics and unemployment statistics and GDP statistics, everything's a scam nowadays, right? Just assume that the information you're getting about what is happening down under is largely suppressed and largely manipulated, and that the truth is much worse than what's being reported. Because, of course, where are you going to get the information? From Google? From YouTube, which is owned by Google? You're going to see it on Facebook? Well, some of it gets through the algorithm. They can't suppress it all. Otherwise, it would be obvious. But just know that whatever we get is less than reality, and reality is likely to be much worse. Here's another example. I mean, how these lying scum can say things like this with a straight face. Have you noticed these articles that are floating around in the media trying to tell people that inflation is actually good for the poor? I don't know how these evil, disgusting people can write this stuff and say this stuff with a straight face. There is not even a sliver of truth to that kind of statement and that kind of reporting. Doesn't even, it's not even like a debate. It's not even something you could say, well, some economists believe this versus some believe that. This is not even, there's not even a shred of truth in statements like that. So Fortune, thankfully, is out with this article. Don't let them tell you inflation is good for the poor. It's not. How would anybody be able to even make that argument that inflation is good for the poor? The poor get hurt the most. October, U.S. inflation reached 6.2%, a 30-year high. Unless the Federal Reserve and the Biden administration change their current approach, the consequences of these inflation levels are likely to be most severe for the most disadvantaged sectors of society: the poor, women, and underrepresented minorities. But I thought they were all for the oppressed and the poor and wanting to help minorities and people who weren't represented correctly. Well, hey, don't worry about it. Look, Nancy Pelosi just bought a $25 million mansion right here near me in Florida. Yeah, they're all for the poor. It's unbelievable. This is like saying the Kim regime in North Korea is really looking out for the people. And Vladimir Putin is, he's looking out for the poor. Sure. So is Nancy Pelosi and Biden and Obama. Yeah, sure they are. Yeah. It's just truly unbelievable. I don't know how these people convince their supporters that they're actually looking out for them, that they're actually doing something for them. I mean, we've had over 5 decades now of these ideologies since the late 60s pervading the country. We've had multiple administrations with these ideals. We've had the end poverty, help the poor for well over 5 decades of this stuff. Really before that, I mean, if you go back to to the Great Depression, you could look at FDR and his stuff, right? You go back before Lyndon Johnson and his Great Society BS, right? And it's only gotten worse at a time when prosperity has increased dramatically. So relatively speaking, the poor are much worse off compared to the prosperity that's been created in society, in the world, in the country in general, and the kind of progress that's been made. It's absolutely devastating, right? Out of this inertia and worried about interrupting economic recovery prematurely, the Fed has dismissed concerns about rising inflation, pointing instead to its transitory nature. Folks, you can't write fiction this good. This is the line with a chorus of opinions exalting the benefits of inflation. Well, that is true. Inflation has huge benefits to me, to our clients, our real estate investor clients, to Nancy Pelosi. All of the investor class are benefiting very nicely from inflation, but it's an epic scam. It is hurting the middle, the lower middle, and the poor classes. It is just devastating them. These people, when the price of gasoline goes up, it really is meaningful. When the price of food goes up, it is super meaningful to their lives. And I don't mean meaningful in a good way. I mean meaningful in a terrible way, in a very, very bad way, because it takes a huge chunk out of their earnings, what little income they have. Look, I grew up poor. I know what this is like. It sucks. And this narrative of these politicians and this left-oriented media trying to tell people that inflation is somehow good for the poor is just such an abject, pathetic lie. It is truly unbelievable. But hey, learn about my inflation-induced debt destruction technique, the technique that I trademarked years ago that is the unique hidden wealth creator with income property. And don't let it devastate you, right? Let it benefit you. It benefits investors. It's actually quite great. But, when the rising tide floats all ships, right? It's not doing that right now. And that is very unfair. It's very unevenly distributed. First, the article says, inflation has important distributional consequences, disproportionately hurting the least affluent sectors more than the wealthy. Duh. Of course. Yes, absolutely. I agree. Although inflation erodes everyone's purchasing power, the wealthy tend to own assets better able to weather inflationary periods. The price of real estate assets, for example, tends to appreciate with general price increases in society. And rental income can be adjusted to keep up with rising costs of living. So if you own rental properties, of course, you're raising the rents, inflation-adjusted rent increases, providing property owners some protection against inflation. The wealthy also tend to have access to hedging mechanisms against inflation, such as shifting assets abroad, where that currency is maybe in that country abroad is not inflating away the value of the asset, right? Trading currency or purchasing gold and cryptocurrencies. Conversely, the working class depends on wages and salaries staying above inflation, which is difficult to obtain in practice once an inflationary spiral takes hold. Indeed, rising inflation has already eroded the early pandemic wage gains of American workers, and real worker compensation is now lower than its pre-pandemic trend. Now, of course, the reporter in this article does not know about my strategy of inflation-induced debt destruction because they didn't say that in here. They talked about how the real estate prices hedge against inflation, the rents hedge against inflation, other investments hedge inflation. That's all well and good. But the real benefit, the mega benefit, the hidden wealth creator is Jason Hartman's inflation-induced debt destruction strategy. Learn about it. Go to jasonhartman.com, type that in. I know it's a mouthful. I get it. Inflation-induced debt destruction. Say it 10 times fast. Just go to jasonhartman.com, use the search engine at the website, type in inflation, or just start listening to the old episodes. There's so much about it. On the main video on my YouTube channel, the featured video is all about this. It's got almost 1 million views now. Check that out. It really helps explain this inflation topic so you really, really understand it. Second, as inflation rises, so does the cost of reining it in. As inflation expectations become entrenched, in other words, everybody believes inflation is here and it's here to stay and it's coming and it's going to get worse, right? A greater effort is required to put a lid on it, right? You got to get Pandora back in the box, right? Okay, get the genie back in the bottle, whatever metaphor you want to use. Greater effort is required, right? So this is what happened in the Latin American experience during the 80s and 90s. Agreements between business groups and labor unions pledging to maintain price and wage levels failed repeatedly because nobody believed others would comply. So inflation actually creates a huge distrust. It creates a huge unpredictability. Businesses don't know whether they should expand. They don't know what they should invest in. They don't know what they should do next year because they're all trying to figure out how bad is inflation going to impact them. And yeah, it's just huge. So that's an example of it, okay? But what happened in the early 80s? To put a lid on inflation, to break the back of inflation, Paul Volcker, our Fed chair back then, had to raise interest rates to historic levels. And it was absolutely unbelievable. Okay, Singles Day. Let me switch gears on this just for a mention of this. So Singles Day, right? The Chinese version of Valentine's Day, right? Because there are so many singles and there's a shortage of women because of their one-child stupid policy that they had. And this is why I don't think China is going to be the next big thing like everybody does. They're doing some great stuff now. They've done some great stuff for sure, no question about it. The Chinese miracle's been absolutely amazing. But just fast forward to 2030, 2033, 2035, and the Chinese miracle is going to fizzle out because they have a huge population demographic time bomb coming at them. All right, but Singles Day generates higher gross merchandise value, GMV, in 11 days than Guatemala's 2021 GDP, the gross domestic product of the entire country of Guatemala. Singles Day exceeded that, right? And it just shows you that this, frankly, conspiracy to keep people single, to raise expectations of women through feminism, to break up families, encourage divorces, you see this all over the media, creates a giant consumer market. Because remember, if you have two households instead of one household, you need two toasters instead of one toaster, you need two sofas instead of one sofa, it doubles the size of the consumer market. So the corporatocracy loves this. They love it when you have double the households. When you create a climate where you discourage marriage, you break up marriages, you encourage divorce, there's like a whole industry built around this that is profiting greatly. just like the pharmaceutical industry profits off these terrible drugs that they're pushing, just like the college debt enslavement complex, these universities are profiting off selling these kids useless degrees and enslaving them in debt for years and years to come. Folks, we live in an era where everything has become a scam. So, happy Thanksgiving. Be grateful. Sorry, my message wasn't. It was definitely a bit of a rant, but hey, you're always telling me you like my rants, so I'm ranting. So many things are just a complete scam, but we've got to defend ourselves with it with knowledge and action that is commensurate with what's going on. Okay, I want to talk about exporting renters. We ran out of time to do that today. We'll get to that in an upcoming episode real soon here. But we've got to go to Ashley's segment where she talks and gives us some good lessons about learning from history and how that can really help investors in learning about jurisdictional diversification. All right, so let's go to Ashley. Happy Thanksgiving to all, and we will see you Friday.
As one of Jason Hartman's listeners, you will have heard him encourage you numerous times to be a student of history, to always look for that invaluable context, that historical backdrop in which to frame everything, to give you a more complete picture of the world today through the lens of history. So why look backwards? Because history is replete with examples of countries enjoying shocking levels of prosperity, to then later transform into basket cases decades later. That's how civilizational cycles work out. But it's not just confined to the West. The African continent has had its fair share of once economically prosperous countries turning into dumpster fires. At one point, Zimbabwe was viewed as Africa's breadbasket and one of the few countries that appeared to transition out of its previous colonial status without many hiccups. So what exactly can Zimbabwe teach investors about jurisdictional diversification? Led by Prime Minister Robert Mugabe from 1980 to 1987, Zimbabwe was breaking the mold as one of Africa's success stories. Although Mugabe was marketed as a revolutionary, he was rather pragmatic in his economic stewardship of the country during his early years in office. Mugabe maintained many of the features that made Zimbabwe's predecessor state, Rhodesia, prosperous. However, he always had a radical agenda up his sleeve, but generally concealed it in his initial years of power. It wasn't until Mugabe became president in 1987 that the country began taking a different path. But things started changing towards the start of the 21st century. Mugabe began pursuing ambitious land reforms that ruffled the feathers of many elites and upwardly mobile economic actors. He met a roadblock in 2000 when voters rejected Mugabe's efforts to confiscate white-owned farms at the polls. But Mugabe was not deterred. He relentlessly pushed for land confiscation and was able to get his wish of expropriating the land holdings of white property owners. By using political and paramilitary means, Mugabe ended up confiscating 23 million acres of land without any form of due process or compensation. But Mugabe didn't stop there. He pursued an inflationary monetary agenda by turning the Reserve Bank of Zimbabwe into a personal printing press that suited his political needs. The monetary policy Mugabe carried out was the most hyperinflationary in recent memory. For example, hyperinflation reached cartoonish levels of 79.6 billion% in 2008. After thoroughly trashing the value of the local currency, Zimbabwe had to embrace dollarization and turn to outside currencies such as the dollar and the African rand. Even worse, Mugabe's government attempted to fight inflation in the most futile manner possible through its implementation of price controls. This policy has been an abject failure everywhere it's been implemented, from ancient Rome to present-day Venezuela. The price controls only worsened the existing shortages and accelerated Zimbabwe's economic debacle. Mugabe was eventually deposed in a coup in 2017. At that point in time, 70% of Zimbabweans were living in poverty, and the country's economic output had plummeted by half since 2000. On top of that, real per capita income had fallen by 15% since 1980. Mugabe's successor, Emerson Mnangagwa, is still facing inflation problems, with inflation presently hovering around 60%, a marked decline from previous years, but still an alarming level of inflation. What you can learn from the Zimbabwean case study is that political jurisdictions can be stable one day and go completely haywire the next. While the U.S. is far from descending into Zimbabwe status, there are states that are much more economically stable than others, so you must always plan accordingly when settling down in one area. America has 50 states that vary not only in terms of their cost of living and housing arrangements, but also in their political profiles. This carries over into how housing is regulated. Generally speaking, although there are a few exceptions, pro-business states tend to be more landlord-friendly. So if you're dealing with a deadbeat tenant, you can evict them in states with higher degrees of economic freedom. Think along the lines of states such as Texas or Florida. So let's not forget the invaluable lessons that history has given us. When you look back at your own history, make sure your story is a success. For more information, visit jasonhartman.com.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.